Hi everyone, welcome back to this week's Technical Insights. Global indices around the world clocked healthy gains last week, even though some indices did not manage to finish strongly on Friday. The reason for the market's optimism stems from last week's Federal Reserve meeting. The US Central Bank left rates unchanged, and commentary from the Fed Chair Jerome Powell reinforced that the rate cuts are coming despite recent hot inflation data, leading to some investors fearing a postponed rate cut timeline. The FOMC committee still expects and projects 3 rate cuts for this year with 75 basis points of cuts in total. So with the Fed delivered through the dot plot, we are finally all lined up and the market is saying risk on with all 3 of the major US indices registering new record close. Before we dive further, let's do a quick recap of how the markets have ended last Friday. Our Singapore Straits Times Index was almost flat last Friday, inching just down 2 points or 0.07%. In the Asia region, markets were largely mixed. Japan Nikkei 225 Index gained 0.18% on Friday and ended its 2-week losing streak, jumping more than 5% for the whole week. Shanghai Composite Index lost 0.95% on Friday, while Hong Kong Hang Seng Index slipped 2.16%. Chinese market were hit by a series of disappointing earnings due to the economic slowdown in China, and Ping An's Hong Kong shares hit a 5-week low as their annual profit fell. On the US side, the Dow Jones Index lost 305 points on Friday, or 0.77%. The S&P 500 inched lower by just 7 points, or 0.14%. The Nasdaq Composite Index defined the drop, adding 27 points, or 0.16%. On the US index, FedEx rose the most, more than 7%, after posting adjusted earnings that beat analyst expectations, while Nike fell 6.9% on disappointing guidance and slowing sales in China. Next, let's look at the weekly performance of the key major indices. All 3 major US indices finished the week higher, registering new record highs. Blue chip Dow Jones Index had its best trading week since December 2023, up 1.97% to 39,475 points. Broad-based index S&P 500 rose 2.29% to 5,234 points. Tech-heavy Nasdaq Composite was the outperformer, rising 2.85% last week to 16,428 points. In Asia, the Hang Seng Index was unable to hold on to the previous week gains, slipping 1.32% to 16,499 points. The Hang Seng Tech Index followed the drop from the Hang Seng Index and lost 2.65% to settle at 3,455 points. For the week, our STI Index joined the rally in the US, up 45 points or 1.42% to settle at 3,217 points. This will be the 3rd consecutive winning week for the STI, with much of the gains coming from Emperador and YangZiJiang ShipBuilding. Emperador was the best performer on the STI Index last Friday, up 2.3%, and for the week, it was up an impressive double-digit percentage of 11.25%. YangZiJiang ShipBuilding was the 2nd best performer on the STI last Friday, behind Emperador. YangZiJiang ShipBuilding was up 1.64%, and for the week, the shipbuilder rose 9.41%, close to the 10% mark. So for this week's technical analysis, let's look at both Emperador and YangZiJiang ShipBuilding. First, let's have a look at Emperador. Emperador is a brandy and whiskey manufacturer. Their share price rose 2.3% last Friday to close at 44.5 cents. The company's share price was known to be very defensive due to its low volatility. For the majority of last year, Emperador share price traded in the range of 49 cents and 53.5 cents. In February this year, it was reported that Emperador could be replaced in the STI index due to the low trading liquidity. On 29 February, SGX issued a press release that Emperador will be replaced by Fraser Centrepoint Trust, and it will take effect on 18th of March. After that announcement, Emperador share price started to slide, and this could be due to GIC selling their stakes in Emperador, which was previously reported that they own 12% via Aran Investment. Emperador share price reached a low of 40 cents on 15th of March and rebounded to 44.5 cents as of last Friday close. On the way down, Emperador share price triggered the RSI oversold level of 30 points and hit a low of 12 points in the middle of March. The RSI has now recovered to 38 points, above the 14 days moving average of the RSI at 33 points. On the MACD indicator, we still have a negative reading, but in the past 5 trading sessions, the negative momentum is subsiding as the MACD line starts to converge towards the signal line. But as both lines are still below the zero baseline, the momentum in this rebound may still be weak, hence the upside move may be limited. So the first resistance level to watch out for in this rebound would be the 20 days moving average now, which is the white line that you see here at 47 and 4 cents. Breaking above this level, Emperador share price could retest the 50 days and 100 days moving average, which is the amber line and the blue line that you see here at 49.4 cents and 50.4 cents respectively. Next, let's look at YangZiJiang ShipBuilding. We covered YangZiJiang ShipBuilding on the 4th of March video, so this will be a follow-up from the analysis that we did previously. But first, I would like to give a shout out to the 8 subscribers that gave us a thumbs up in that video. That gave us the encouragement to continue updating you guys watching with the latest content and developments in the market. So if you have not subscribed, do hit that subscribe button and give us a like for this video. Now back to YangZiJiang analysis. On the 4th of March video, we saw YangZiJiang share price was around the $1.79 level. Here, I would like to quote the analysis that we have done previously. We observed then that the MACD line was seen diverging away from the signal line, and this could be an indication of the further upside momentum to come. However, the RSI has reached the 69-point level, which is just 1 point short of the 70-point overbought mark. YangZiJiang share price has since breached the upper bound of the Bollinger Band then, given that YangZiJiang share price has been on the uptrend for the past few months since October last year. When the RSI hit above the 70-point overbought level, we may see a short-term pullback before the resumption of the longer-term uptrend. The first support if a short-term pullback happens will be the 20 days moving average that you've seen then on the white line over here at $1.67. This is followed by the second support level at the 50 days moving average, which is the amber line that you see over here at $1.61 before we see the resumption of the uptrend again. YangZiJiang share price hit a low of $1.68 on the 18th of March, last Monday, and it was just 1 cent short of the $1.67 level that we mentioned earlier. Prices then rebound to the $1.86 level last Friday, resuming the longer-term uptrend. For traders and investors who are holding on to YangZiJiang ShipBuilding share price or who managed to bought into YangZiJiang share price at $1.67 or $1.68 level, the next resistance level to watch will be the upper bound of the Bollinger Band over here at $1.90, and that will give you a gain of around 13% from the $1.67 level. And these are the updates that I have for you guys this week. Do remember to like, share, and subscribe, and let us know what you would like us to cover next. And I'll see you next week in the next Technical Insights.